Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So, as always, we're going to get into the data. Today is a big day because after hours, we will see earnings from Nvidia. Nvidia, again, almost a $4.5 trillion company. To put that in perspective, the entire Russell 2000 only has a market cap of around $3 trillion. So Nvidia by itself is $1.5 trillion bigger than the Russell 2000. Pretty astounding numbers, to be honest. Now, the numbers today, one of the things we're going to be watching here is what they do in terms of guidance, but also in terms of earnings per share. And let's take a look here. So earnings today come out at 4:20 p.m. Eastern time. Analysts are expecting 98 cents per share on revenue of 4.5 or $45.91 billion. Now, listen, the whisper number, which is really what markets are putting as their baseline, is $1.06 per share. And I want to be clear on this, folks. Understand that because the stock has rallied so much, even just in the last few days, it's gone up about $13. If you look at the low from last week to where it currently sits in the pre-market, it's about a $13 gain on the stock. That's not quite 10%, but that's pretty close. In other words, investors are buying it up, expecting them to have rock star numbers. All right, meaning that they probably, to continue up, have to beat the whisper number even at $1.06 per share. Now, can they do it? Absolutely. But also guidance is going to be important. What is their guidance? Are they going to guide up, which is what the market wants? If they guide in line, the stock will sell off. If they miss guidance, obviously, it will sell off quite a bit. So this is the big event here, guys, on this week. We do have PCE data on Friday, but again, this, I would say, is the game changer for the tech sector and by default, the entire market. All right, so let's jump into the S&P futures. We'll look at the Nvidia chart in just a minute. The S&P futures are virtually flat here this morning. You can see that yesterday we closed right here on the S&P. And you can see drawing a trend line across, we're literally within a point or two of the flat line today. Overnight, we did see a little bit of a positive move, and then early this morning around 3 in the morning, a small dip, then floated back up. And then we did hear from the Federal Reserve President Williams. He's president of the New York Fed, and he did talk a little bit more hawkishly than I think investors were hoping for. And you can see the market fading just a little bit on that chatter this morning. But let's go quickly to our S&P chart, taking a look at the daily chart. Take a look at how the market on the S&P is getting squeezed between two trend lines. All right, we have the long-term trend line that I've shown you guys every day, probably for the last 3 weeks, going back to October of 2023, connecting through that August swoon that we saw in 2024. And then obviously it broke during the Liberation Day and subsequent sell-off. We then have the underbelly trend line right starting in May and connecting through each subsequent low. And we see price is literally between these two lines right now. So is it going to go up here and tag the resistance line? Is it going to sell off and tag support? Which way does it break? One thing we do know is that when wedge patterns squeeze price, it's like a pressure cooker. And ultimately what that means is whichever way it breaks, you're likely to get a subsequent large move in the market. All right. So we could see, again, a big push to the upside, let's say to 6,700. Or if it sells off, we could very quickly see a drop towards 6,000. And I would dare say the combination of the Nvidia earnings, which will shape our outlook for AI and technology, and by default, the weighting of Nvidia alone, 4.5 almost trillion dollars, will really dictate the market action. Throw that in with inflation data on Friday, and you have the recipe, at least, for a potential breakout if the numbers on both are very good, or a breakdown, a big breakdown, if both numbers are bad. Imagine we get bad Nvidia earnings and we sell off on Thursday and then high inflation on Friday on the PCE. That could really cause a pretty big dump in the market, kind of a double whammy, if you will. All right, back to the charts we go. The QQQ here continues to trade within its parallel, its short-term parallel, respecting the upper range here. The upper range, if we get a monster move on NVIDIA earnings, the upper range is capped at 592 on the QQQ. And then on the downside, if we break down, if we start breaking below 567, watch out below, folks. The fifth hit again, there's a 60% chance on a fifth hit of this trend line that we break. So again, it's not a huge advantage to a breakdown, but it is favoring that angle. If we come down on NVIDIA earnings, I would expect that to break at that point. Dollar today up just a little bit. So again, the dollar just continuing to kind of hug this bottom area of this bearish overall pattern, kind of just limping along, if you will, in the lower ranges of the DXY chart. The 10-year yield inching up just a tad today, and we can see again, it broke the wedge pattern with a big move down, and now it's been consolidating underneath. I'm almost looking at this and thinking, could you be forming a little head and shoulders here? Now, head and shoulders at the lower bands of the chart are not quite as good, but you can almost make it out. I mean, if I were to go to the hourly chart, I wonder if the hourly chart would show it a lot better. Let's take a look here on the hourly. And yeah, you could kind of make it out. It still has to curl over, and I'll just show you guys because I know it's all about learning here. But you basically would have something like this, and then that, and then this would be your right shoulder right there. And so again, on that tune there, you can see the general pattern. And again, I would just caution that when you have a chart that is kind of at the lower range, the head and shoulders aren't quite as powerful, but it is something that as a technician, of course, you want to take a look at, right? And I think that's important, is that there are going to be different things that form at different points. Like a topping tail that's not at a 52-week high has a lower probability of being successful as a reversal signal than a topping tail that is at a 52-week or all-time high in the market, right? And I think these are really, really important things. In fact, I mean, just to show you guys a great example recently of a topping tail that has played out, if we flip back to the charts here, platinum, I think it was platinum. Was it platinum or was it palladium? I think it might have been palladium. Let me take a look. The palladium chart here. Yeah, palladium had this amazing topping tail right here, and you could see the subsequent sell-off that we've seen on that metal. And again, keep in mind, everything I teach you guys, everything I go over as in price, pattern, and time factors, they are universal to all charts, as long as you have volume. Right? Volume is a key component because you have to actually have participants in the market actively kind of investing or trading it. Otherwise, again, if you have one buyer one day, one buyer the next, you're not going to get the same formations. But if you have an active market, everything I teach is universal to Forex, commodities, crypto, and stocks. All right. In any case, by the way, on palladium, it's getting very close to a buyable level here. I'm eyeing this myself as an opportunity. All right, got a little off track there from the 10-year yield, but it was more educational. Now, taking a look at the NVIDIA daily chart, we've talked about how we broke this key trend line that goes back to the April lows, right? So again, look at all the hits on the trend line and finally broke. But even when you break, what's the tendency? To see a retrace to the scene of the crime. And we kind of even saw that here. If we just flip back to this chart here on the 10-year yield, you again, here you have, again, and let me just get rid of that small head and shoulders we were looking at. Here you have the same sort of thing, right? You have the breakdown and then kind of a retrace to the scene of the crime. And by the way, even on Bitcoin, and we'll get into Bitcoin in a minute, but Bitcoin, same thing. Here's your longer term trend line right here, breakdown, retrace to the scene of the crime, and then rejection. Right. So it's very, very, very common that that does happen in technical analysis, and you shouldn't be surprised at it. And part of the psychology, remember, charts are representations of human behavior. It's buyers and sellers. It's greed and fear. I mean, that's what a candlestick chart is showing you. When you get a breakdown, there's a certain amount of buyers that are saying, oh, Nvidia's on sale. Let me buy it and buy the dip because that has been what's been working all the way from the lows. And so that's why you get these retraces, oftentimes even to what I call the scene of the crime. All right. Now, whether or not Nvidia pops on earnings into that scene of the crime, I'm not privy to that information. I don't have that insider information, although we've seen so much lately that people are getting insider information, at least the haves, not the have-nots like you and me. Okay, in any case, keeping an eye on this. Again, upside would be, to me, limited to about 190, give or take. So if it pops, 190 would start to be resistance. The big question I have, is this going to be like a Microsoft event where Microsoft on earnings rallied or gapped up sharply and then has sold pretty much nonstop since? Or is it going to be a kind of just a sell-off event right at the open? I'm not so concerned about Nvidia going up and then continuing higher because it's so overbought and we have the levels of resistance. But again, I'm not privy to whether or not it's going to gap up on earnings and then sell, or is it just going to kind of come back down? If it does get up here on tomorrow's game plan, would I potentially be talking about shorting it at that level? The answer is yes. That would be a significant resistance to watch. All right, speaking of big moves on earnings, MongoDB. Wow, what a move on MongoDB today, up 30% on earnings. This is a cloud provider, essentially getting a boost from AI data center type stuff here, and that's going to be a driver for these cloud providers, no doubt. If we look at the daily chart, there is a level that I'm zoning in on. Take a look at this technical level here. So you have, going back to September of 2024, notice how price just continued to get rejected off this 299 to 300 level. We then did have a short-term break above. It came back below, and then look, it reestablished right here in February as resistance. And so just based on that factor, the odds would favor, if this chart does see a boost of another $19, let's say, to touch 300, which wouldn't be that big of a move considering it's already up 30%, this would be, for me, a level that I would hone in on to short on this chart. So to short MDB, MongoDB. Now, another cloud provider, Okta, did have earnings as well. The stock's up a little bit, but comparatively, there's no comparison to MongoDB. This stock, again, closed at 90, just under 92. It's trading at just above or just below 96. Trading this, it's really, and you can see here, this is where it's trading pre-market. It's not a big enough move to get me excited just yet. Again, if I was really zoning in, I'd probably be looking at the $101 level. You can see kind of a flattish area right here with this high, which goes through this area from July, and that's around 101 to 101.50. Again, I'm not sure. It's not nearly as extended as MongoDB. The more extended, the better for me, because it means that the rubber band effect will have a bigger pullback. And let me just explain the rubber band effect. So the reason why I like stocks making big moves for counter trend trading opportunities is because it follows the same theory of emotion taking over. So human emotion takes over and people start FOMOing in regardless of valuation, right? And so you start to get these stretched charts that just keep going up and up. And I liken it to a rubber band, right? You stretch a rubber band, you stretch a rubber band, and you stretch a rubber band. At some point, either it snaps or you release it. And what does it do? It snaps back hard. And so that's the idea, is that if you just have a stock that's up a little bit, I mean, like this much, what's the snapback going to be? Like this much? You know, that's a very small reward when you're analyzing risk versus reward to making money. You want something very extended because there's more margin for error. If it goes against you a little bit, when it does snap back, the snapback's so big that who cares that it went against you $1 if it snaps back $10, right? And that's the idea behind these really extended moves. Now, you have to use technical analysis. Otherwise, you're just guessing at, oh, it's extended. I kind of feel my gut. No. Guts doesn't matter. And I've learned this the hard way, guys. You guys know this. Listen, I'm far from perfect. I do, again, win quite a bit more now than I lose, but I still lose. And early in my career, I was losing all the time. So don't feel bad if you're in that position where you're making decisions and it always seems to be wrong. That's part of the learning curve. Just educate yourself so you can have the learning curve up towards winning faster than I did, for instance, which took me a long time. All right, guys. So back to the charts we go here. Other charts, KSS, Kohl's reporting this morning. This one's having a nice move. Kohl's is up from about a closing level yesterday around $13. It's trading near $16. So percentage-wise, that's pretty nice. You can see this had that big pump a while back when it was kind of one of the meme stocks. So in terms of this, I would begin. I mean, again, this is tricky because of this trend, this big candle, but really the opening level that day at around 1977, if it gets up there, that would be a short, and then I would add a double top up here at 21 and change. Now, keep in mind that there's a lot of bag holders that are here, and that's why you'll have a lot of resistance because a lot of people were buying this. This was a huge volume day, by the way, when it was kind of pumped before the dump. And there was like millions of shares being bought up here where those people are still underwater. They're loving this pop on earnings, but they're just praying it gets back to this level so they can sell into it. And that's again a psychological impact of being in a position where you're out of the money massively. You just pray that you get back to break even and say, hey, if I just get back to break even, I'm taking my money and running, right? You're just made whole again and you are done. And so that's again what will cause a lot of selling here and why we as technical traders can look to short into that because those sellers will help push the stock price back down. ANF down on earnings. So this is another retail stock, Abercrombie and Fitch. The stock is down a little bit here. I mean, again, closed yesterday around 96 and change. It's trading just below 90. If we look at the daily chart, again, this is kind of one that's been hammered down. My first level on this one would be, if you're really aggressive, there's a good level at approximately 83 right through here. And again, notice how I found that level. You can see high pivot, and then it was respected here. You had a gap up, and then it came below, and it was respected again, and then kind of paused before the move up. So this on the way back down at 83 Pierce should be a decent level of support. If it gets through there, you got some gap fills around 77 and then down to about 74. Here we have WSM, which is Williams Sonoma. This stock popping slightly on earnings, but almost nothing here. So there's not much for me to dissect. All right, let's dive into Bitcoin. I did talk about that a little bit earlier on in terms of the retrace to the scene of the crime. But essentially what we can see here, folks, is that Bitcoin broke. It didn't confirm. But remember, when it doesn't confirm the breakdown, it means the yellow line here is minor resistance. So it's still resistance. It's just the probability is not as high that it's going to get rejected. In this case, it's still helping reject price, but it's still minor resistance. So if we pause here for a few days, we could actually break back above. Once you confirm below, we would have to have a close basically below 109,300. But if you did confirm below, then it raises the probability of us heading towards this $100,000 level down here. All right, so again, I'll keep you posted, but Bitcoin certainly has had quite the dump after going to about 124,000, and it finds itself as low yesterday as around 108,000 before this little bit of a bounce. And then we could just take a quick look at ETH. I know some of you guys like your ETH charts here. And even if you're not a crypto investor, always remember you can learn from this because it's the same analysis I would do. Like this could be the chart of Apple. This could be the chart of whatever. It doesn't really matter. But the point being here is we talked about this little area of support yesterday right here. It was only minor, but certainly got a bounce. And now, again, essentially what you're doing is you're looking at a trend line here. This is going to be your upside resistance at around just above 5,000 and your minor support at 43.40. And then if that breaks, you'll have 4,065-ish support right down here. All right. So again, really ETH is just kind of chopping around. The chart on ETH is stronger than the Bitcoin chart. There's no doubt about it. It has not had as big a rollover in the last, couple days. So this would be looked at as being relatively strong towards Bitcoin, which Bitcoin dominance is telling us that should be the case as well. Gold, let's talk about gold. Gold had a bounce yesterday, but it is pulling back today. I continue to be a little skeptical on gold only because the chart's saying that, right? For me to really be a near-term bull, we would have to take out this zone up here near 3,500. Mid to long-term, my bias is as strong as ever. I still believe that our U.S. government and really global governments have they're just going to go back to their old playbook, and we're seeing this already with the Fed. So inflation is higher than the mandate, right? They wanted 2%. It's basically 3+%, and they're already talking about cutting rates. And so they go back to what worked in the past, even though inflation is going to stifle the consumer and all of us. But that's what they know how to do. And the government will do the same. Is once things get tough, listen, government cuts were basically, I mean, do you guys even remember that thing, the whole Doge thing, like supposedly going to cut all this spending? No, it didn't happen. It didn't happen. I mean, they cut it from a few areas and then they just added a 3 trillion more into the mix. So my point being is that this is during an expansionary period in the US economy. We've been growing. And by the way, history has shown us that in the past, when we have recessions, that's when government spending goes up. Then during expansion, we pay down our debt. But guess what? That hasn't happened over the last 10 years. It hasn't. We've just kept spending and spending more and more. And so what's really scary about that is we're not even in a recession yet, and the government has run up the debt that we have. What happens when we get in a recession? I mean, so these are all headwinds. Listen, I didn't mean to get off topic here, but the point being is that going back to gold, gold is going to be something that makes sense. And if it makes logical sense and the charts confirm it, in the mid to long term, which they do. There's a bull flag on the mid to long term chart here. We should be going higher. Short term, again, I'm a little skeptical on gold here. In fact, I did short GDX yesterday with members of Smart Money Commodities. Amazing move up here. I want to show you this, by the way. So one of the things in technical analysis, oh my gosh, it's already so late. I apologize. I apologize for keeping, anyways. All right. So take a look at this trend line. Draw the parallel up to the short term this high and look at what we hit yesterday. And then if it goes higher, where's your next target? Right here. So for me, I started a short position right here yesterday. And if it gets up to this next level, then I would add at that level. And remember how I trade. I never go all in on my first buy. I usually have 4 or 5 buys scheduled, or shorts in this case, and then I'll dollar cost average. Because you always have to understand is that, a technical level can be broken. And I always err on the side of caution because the ones that work out perfectly, okay, that was easy. But how do you manage the ones that don't work out perfectly? And I always found that being defensive is actually better for your bottom line in terms of profits. All right, so let's quickly finish up here, guys. And I wanted to get to some questions today. I apologize if I won't have time, but taking a quick look at oil. Oil is flat on the day. It pulled back shy of my target level for a short, so I didn't get a short off on that. That's okay. It's still, again, between support and resistance. And then natural gas here continues to be something that is of intrigue. It is getting a bounce here. I was kind of hoping it would go down into this support, but this will remain around $3, will remain resistance unless it can confirm above. And so that's kind of something there. And let me just answer at least one question here, guys. To see what's going on. NVO has been volatile. Can you break down the chart? Sure. Let's do a quick breakdown on NVO. NVO, yes. So look at this. I mean, this was just picture perfect. In fact, I had this trade, major technical support, and look, went right there, boom, and went up. And then look at where my line was. And I don't even remember when I put this line in, but this was your target. And look at how it got rejected. So now what you can say is on NVO, until proven otherwise, it's stuck between resistance and support. And so, for all we know, it'll kind of go up and down and up and down. If it breaks and confirms above 57 and change, you should fill the gap at 69. But again, we can't assume that at this point, and that will be key support. All right, one more question, guys, here. Can you, let's see, is there a long-term silver chart forming a cup and handle? All right, let's go back to silver real quick here. I didn't even look at silver. I apologize. Silver, this is good to go over then. Silver's not doing anything new here, by the way, still away from resistance. But the question again is it forming a long-term cup and handle? I assume you mean this would be your cup and this is your handle. This is really not a good handle. Handles should be much more of a kind of a 45-degree angle at most, something like this. So you really should look like a cup with a handle, right? And you don't really see handles. This more looks like a secondary cup. And it's not to say that at some point we're not going to break up, but obviously, we have to look and say it probably would not be at least fit the criteria for a cup and handle pattern. All right, guys, running late here. I got to get to my trading room. Thank you guys so much. I love educating, though, as you guys can see. And therefore, that's why things run late, because I always want to give you guys more and more and more. But you guys go have a wonderful day. Check us out at verifiedinvesting.com. Look at all our swing trading services there, as well as our live day trading room. That's where I'm headed now. You guys have a great one. Thanks for tuning in. Much appreciated, guys. Take care.